What's up, guys? Welcome back to the channel. I'm gonna be finishing an audiobook today called Market Wizards, written by Jack Swagger. I think it's published, this one, the original version's published in 1987. I got that version. There are updated ones. But he interviews some of the best traders of all time. And, you could call, Jim Rogers is in there, and he refers to himself as an investor. He's like, I don't know what you mean by trader, but investing, yeah. But a lot of these guys he interviews are commodity traders. And it's a really helpful book. It's a really helpful business book because he asks these guys, what has made you an outlier, like unbelievably successful? And I'm talking guys that are starting with $5,000, $10,000, turning to 200 million. In a couple of cases, he's got Paul Tudor Jones in there, turns into a few billion. And he's just like, hey, so how come you guys are able to do this and like the average guy or like the public is not able to do this? And what's interesting is almost all of them early in their career they have a huge gain. Like they do really well, get to a certain number, call it $5 million, they lose it, and mostly lose it on one trade, and then all of them kind of adjust and then create rules for themselves. So that's the first observation I have with this book, is that all of these successful investors have their own rule book, and they all violate it at the beginning, or it doesn't exist. And then after they make that mistake, they never do that again. And that's one reason why that they've been so successful. For example, a few of the investors in that book are like, yeah, I don't do anything more than a 3% drawdown. If it's a 3% drawdown, I'm out. Now, this is the second point that I found interesting. All of them were more than happy to realize a loss. And by realize a loss, I mean like they were happy to take the loss. I had a buddy that was trading options. And I love the guy, sold his house, had some equity. He's like, Trav, I'm gonna trade options. I'm like, that doesn't sound like good to me, but okay. Like, and I'm fine with trade. Like, if you want to trade options, like I'm all about it. I do it sometimes as well on like certain companies. I feel like I know what direction they're going, and so by buying an option, it gives you a little bit more leverage. But nonetheless, he had a loss. He got to a spot where he had a loss, paper loss, hadn't realized it yet, hadn't sold anything yet, and he didn't want to sell because he didn't want to take the loss. So he just wrote it down, and wrote it down a few times. Like it didn't really work out well, and so all of these investors are more than happy to take a loss because of the time value, because they'd rather take a loss on their capital and move into something that they feel like they have more information on, or that they feel like the trend is moving in their direction on, rather than try to will it into existence. I think like small business owners, entrepreneurs, people don't want to take a loss. Well, I bought this one asset and I don't want to sell it for this, but by doing that, you're not making the best decisions. So you've got to look at the capital that you're investing, and you're like, given this balance sheet, where am I best to invest it? Like, where should it be best? If you're like, oh, well, I wish I had more in this asset and less in this asset, but I don't want to sell this asset because I'll have a loss. It's like, no, get rid of that and get what you think is better, like immediately. And that was a big observation in this book. The next thing that I had noticed in this book that was like really different than everyone else is that they weren't trying to time anything. They were just trying to do genuinely good on their investment. Like they were just trying to take a big slug out of the middle. They weren't trying to find the bottom. They weren't trying to find the top. But all of them said one thing, with the exception of Jim Rogers, who basically said the same thing, but in a different context. Jim Rogers is my favorite investor of all time. You can find him on YouTube. He ran the Quantum Fund with George Soros back in the day. They both became billionaires. Jim went off to ride a motorcycle around the world. Then he did it with a diesel Mercedes G-Wagon, but he took the frame and he took a Mercedes convertible. I think it was the SLK, and he put that on top of the G-Wagon. He actually had Mercedes do it. They warranted the entire thing, and they took that around the world. And so he just became like a worldwide like solopreneur investor. So Jim is like by far my favorite investor. But he said the exact same thing. All of them we're more than happy to buy something at an all-time high because it shows that the trend has shifted in the favor of that said asset, which is not intuitive to me. Where I was like, you don't want to buy anything at an all-time high. You'll be selling things at an all-time high. And all of them said, no, typically you're going to have really great odds mathematically because you know that the trend has shifted. If you're there early, you're there early. I mean, I guess you could be there a decade early, you know, and it could be wrong. And so all of them had said, yeah, when we see a trend shift, when we see a catalyst shift, that's when we go in. And I thought, man, that's really interesting because there's a few things I'm looking at now in business and in investing. And I'm like, what's going to be that catalyst? You know, one thing I'm super bullish on long term is agriculture. I just think the U.S. ag situation is a wreck. I don't think that there are any micronutrients available in the United States. And I just think that eventually at some point in time, this is going to be evident. And that there might be, you know, a trend shift for people demanding healthy food. I went to a church service this weekend. We had a church brunch thing afterwards. Nobody cared about what was in the thing. I was showing people like, oh, look at this. Like, it's caramel coloring. It's yellow 6. You know, it's all the things on the back. Everyone's, yeah, whatever. It's like, okay, you guys are eating poison, but I guess nobody cares. And so, as an investor, it'd be kind of foolish in a way to invest in that now. It's weird because there's a big lag in agriculture, right? Like, if you're going to be really killing it in ag, it's going to take a few years to build up. Not just going to plant a fruit tree and just be killing it tomorrow. You know, it's going to take 7 years. So, but all of them said there was a catalyst, something that shifted. I noticed this with Bitcoin in 2020. I've got a video where I'm making fun of my Bitcoin buds. I'm like, how we doing today? It's March 20 of 2020. And Bitcoin had fell like 3,500. I should have backed the bus up. I should have just went in and just bought 20 coins real quick. And instead I was like, oh, this is interesting. We'll see how this shakes out. The catalyst was that week they announced they were going to spend like $5 trillion printing. All of a sudden it just freaking took off and never stopped. That was the catalyst moment. I missed that. I didn't have the knowledge to know that. And then when it was like 8, whatever, it was like, okay, is this still like the thing from back in my college days where all my like weird libertarian buddies are like, into this and like it's just magic internet money, or is this now becoming part of like the solution to get out of a system that's clearly dying? And I missed the catalyst event. And or I didn't recognize the catalyst event. I didn't miss it. I mean, because I have some, but I misunderstood the catalyst event. So you're looking for things that are going to shift, that enable a new trend to begin, and there's a clear catalyst. And at which point, that's when you go in. So Market Wizards, I'll link to the book. I just thought it was freaking excellent, and I thought there's just so much to learn. I got about 2 hours left on it. He interviews all these different investors in it, and man, it's a really, really good book. So I have like 2 or 3 more interviews that he does, and you notice these trend lines in it. So see you guys in the next one.